Hello, welcome to FountainFX. This is the monthly report for October. And we're looking at the euro against the US dollar because they were very much in the news during the whole period of that month. Now, the reason for sharing this is just to show how price reacts to news or doesn't react to news often. What we know is that throughout the whole of October, or the first half of October, the US was in shutdown. The US Senate wasn't allowing the US government to continue to print more money and service and pay for all the services that it needed to pay for with government debt by issuing bonds, etc. So we had a situation where there was a bit of a standoff, and so therefore naturally we would expect the US dollar to fall in value against the euro. And if we see at the start of October, that's what happens. If we see at the top right hand corner, blue candles shows growth in the euro against the US dollar, and we're up at $1.36 to the euro. As this continues, their price starts to bounce sideways, up and down, comes all the way back down. Why has the dollar suddenly gained strength when there's all this problems in the US? We don't understand. So we get a doji here, area of indecision, but also shows a potential turn or change in direction. So price then moves up from there. We get another doji at the top. Guess what? Price is coming back down. So this whole area of where price is, because of news and what's happening, a lot of indecision, a lot of uncertainty. Price is starting to bounce up and down through a very narrow ceiling of only 100 points between the 135 and the 136. So what happens when we get to the 17th? See, the 17th of October, that big blue candle. This period of indecision was the 16th, and at the end of the day on the 16th they suddenly turned around and said, yep, okay, we're going to open the purse strings again. You can have an extra $2 trillion of debt to be able to pay for all the services, so people won't go hungry, people will get health care, all the rest of it. And suddenly we then see that in reaction the US dollar falls in value, and the whole amount of change from low to high is only 150 points. So while it may look alarming, it only moved by 150 points. That was the day after's reaction to the market. So that's how you could have taken opportunity, which is stay out the market up till here, wait until the news came out, and then the following day just look at what the market was doing and short the US dollar. But within a day, so that was the Thursday, the Friday, nothing. And then what happens is the following week comes back in, and the decline of the US dollar continues based on non-farm payrolls, which came out on the 22nd of October. So the reaction on the Friday, the 17th, was just double checking. No, the reaction on Thursday, the 17th, was sell the dollar. Friday was, it's moved a lot, let's all have a holiday. Monday was, well, we're not going to do anything today because they're now going to release the non-farm payrolls, which we don't trust anyway. And so that comes out on the Tuesday, and the reaction is that yes, it's bad news, let's sell the US dollar. So a lot of people have been saying this is the opportunity for the decline in the US dollar. This is the opportunity to short the US dollar. It could be a case that we're going to see the highs of the euro against the US dollar again. We're going to see the highs of the pound against the US dollar, which was up at $2.10 back in 2006, 2007. So, you know, is that really going to happen? Well, let's see what happens after these bits of news. We then get another period of indecision. Yes, the US dollar falls again, and we're in a period of indecision. But now the euro is starting to fall, the US dollar seems to be pulling back. But isn't that how markets work? They go up, they pull back, they go up, they pull back. Well, what's just happened? Look at the euro falling. No real reason why that is, other than we look in here, the euro is falling against the dollar. Now yesterday, I understand why this big candlestick happened, this one here, because the Eurozone cut its interest rate. Why did it cut its interest rate? Because the Eurozone is not growing as fast as it's expected. So that causes a decline in the euro. But what's caused all of this here? There was no real clear news or whatever to say that the Eurozone was in bad condition. So it shows that there's something else out there, that people, banking industries, institutions, etc., are unsure of the euro. Considering there's all this negative news about the US dollar, that's expected. But the euro has actually fallen against the dollar faster than the dollar fell against the euro, with all the negative news against the dollar. So be aware of what's happening in the euro. It's of concern, I would say. The euro value may not be as good as we expect it to be. So that's a summary of what's happened in October, and happy trading from FountainFX.